next, ladies and gentlemen, we have a panel discussion session. And as we set the stage, allow me to introduce you to the topic of the discussion, as well as the speakers and moderators. The discussion topic is enabling sustainable finance with green fintech and green tech solutions. To moderate the session, we have the pleasure of having with us Ms. Jenny Lee, Deputy Secretary General from Hong Kong Green Finance Association. And our speakers, panelists, include Mr. Mark Blick, CEO of Diginex, Mr. Ronald Young, Head of Sustainable Finance Asia, Global Banking and Advisory, Societe Generale, HKGFA Sustainable Finance Product Workstream Leader, and Mr. Angus Choi, Partner ESG Advisory, KPMG China, HKGFA Greentech Data and Infrastructure Workstream Leader. So, ladies and gentlemen, let's put our hands together to welcome Ms. Jenny Lee, our moderator. Welcome, Jenny. Thank you for joining us. And also Mr. Mark Blake, Mr. Ronald Young, and Mr. Angus Choi. Let's welcome our panelists. Welcome. All right, beautiful and seated. So, Jenny, the stage is all yours.
Great. Thank you so much, and I'm very happy to be here. Thank you to Cyberport for the invitation to moderate this panel. Just before we started, a little bit about the Hong Kong Green Finance Association. We are a 160 Hong Kong-based institutional member association, really here to convene kind of like the public sector, regulators, government, and also the private sector to mobilize sustainable finance. So we're very honored to have with us on this panel some of our members and workstream leaders and distinguished guests. So to kick off this panel, I think we've really heard earlier today where Hong Kong is in terms of its leadership in terms of building a green and sustainable and green ecosystem. And we've seen here that really in order to achieve this $66 trillion that's needed to decarbonize Asia, we need a full transformation of economies that will require technology. And so we really see technology as a key enabler to accelerate sustainable financing. But in order to do that, we also need quality data and measurement in order to ensure that we have accurate measurements of reductions of carbon emissions to mitigate greenwashing. And on this panel today, we have kind of like the ecosystem in terms of the consultant who basically connects and brings together clients to identify solutions. We have our sustainable finance banker who basically connects and looks and uses the end user of the data to structure financial products. And then also our green fintech innovator. So to kick this off, I'd like to ask the first question to Angus, because earlier the Deputy Financial Secretary talked about the green fintech competition that HKMA had organized, and you were obviously very instrumental in this, in addition to looking at the current landscape of green fintech. So can you share with us what you're seeing currently in this space?
Thank you, Jenny, for the questions. Actually, yes, KPMG was supporting HKMA to organize that green fintech competition. And when we started that engagement, it was actually one of the first questions that we asked ourselves: how do we define green fintech? We did two things. Number one is we conducted a research. We check all existing green fintech definition over the world. However, we couldn't find a universal definition of that. The other thing what we found from our research was sometimes when we think about fintech, we often associate fintech to a startup company. But in reality, what we found in the research was that there are actually a lot of big companies in the ecosystem. They are doing a lot of fintech. They are offering fintech solution. And in ESG space, sustainability support to the financial sector, and they are actually not small company. And we can, in general, classify them into 5 different types of companies. Yeah, The first one is the giant technology companies like Microsoft, Google, Amazon. Actually, they are doing a lot of fintech solution and innovation in this space. The other group of companies that are very active in this space are those data vendors like MSCI, S&P, Bloomberg. They are actually offering, investing a lot of money in this space and offering a lot of ESG and climate data that a lot of banks and asset managers in Hong Kong, they are using or they subscribe to that platform. The third group of companies are those, surprisingly, financial companies themselves. Because very often when they want to do something, we heard a very great sharing from BOC in the previous session, right? They also do a lot of fintech, right? They leverage fintech ecosystem, but at the same time, they also invest a lot. And sometimes some of these companies, they want to do something, but they couldn't find a solution in the market yet. So they create something for themselves. And in a way that they create this solution so good that they even bring this to the market. One example is BlackRock. They are very advanced in terms of ESG investment. So they created the BlackRock Aladdin platform to facilitate them to do ESG investment. And later on, they also offer this solution to a lot of the other asset managers. There are actually two more groups. They are fintech company who originally they are not doing green fintech, but they also see opportunity here in this space. So they keep investing and doing more and more. And then the last but not least are those companies which find that with a very pure and strong vision in ESG and sustainability, like Diginex, right? They are what we call 100% green fintech. So all these companies formulate the ecosystems and what we call green fintech. So if we only classify green fintech as those startup company, we may actually exclude a lot of good solutions. So when we work with the HKMA, we actually tell them that let's try to define green fintech to the solution that, whatever company who has great solution in green fintech should join this competition, yeah? So that's the number one thing. And the second thing that we did was actually an industry outreach. So we interview a lot of bankers. We asked them, what are the pain points in sustainability that you have? We want to identify solutions which can help them to resolve their pain points, yeah? Because at the end of the day, we want to help them. And also HKMA, they, as you know, the purpose, right? They serve Hong Kong by promoting monetary and financial stability, right? So when it comes to defining the use case, we at the end we come up with 4 categories, and they are climate risk, so solutions which can help the banks to do better climate risk assessment. They should be one category. The second one is green finance, so solutions which can help the banks to do more green financing with scale and speed. Yeah. The third type is net zero, yeah, and transition. So there are actually a lot of solutions which can help the banks to decarbonize their portfolio and also their customers. And last but not least, the fourth group is ESG data and disclosure. Yeah. So with these categories, what we think is it can actually help us to better define the ecosystem and find the best company in this space to serve the financial sector in Hong Kong.
No, thank you. I think it's really important to have a definition for green fintech, because again, people will have, when they're allocating capital, they need to be able to define kind of like the actual capital usage and to measure these against certain KPIs. Ronald, as like an end user, so we then look specifically at the financial sector. We look at how does the financial institutions kind of like look at the data and assess the readiness as well?
Thanks, Jenny. So, I'm a sustainable finance banker, so I'm not a tech expert. So I'm going to talk about this from a user's perspective. So, we work with a variety of ESG info and data. So let's take like structuring a green bonds or a sustainability-linked loan, for example. So we have to assess the issuer's ESG maturity and readiness before we can help them structure a loan. So what do we look at? So one is like we look for like what we call stock information, like information as of now. So we want to see like if they have like comprehensive ESG policies, like for example, a good environmental management system, labor rights policy, supply chain code of conduct. And we also look at what we call historical information. So it's like basically what are the recent past incidents that the company are involved in, and then how did they resolve it, and then did they put in place a management system to prevent the incidents from happening again. And we also look at like what we call a trending information. So it's like the recent trends of the company in terms of the GHG emissions. Are they doing well in terms of the GHG emission reduction, for example? And then we also look at, like, for example, the water usage. What's the trend of that? And then what's the lost time incidents or injury rate of the employees? And on top of it, we also look at like prospective information. Like, for example, what are the company's commitments in terms of targets? One of the key items we look at is like GHG emissions reductions target. What's the trajectories? And if the trajectories is ambitious enough, whether it's aligned with a Paris Agreement, 1.5 degree scenario, or well below 2 degree scenario. And then there are the targets, environmental targets like water usage efficiency, or actually social targets like gender equality. So these are like all the information we look at before we structure a transaction. But after we help a client to issue an instrument, we also look at post-issuance information. So let's take for green bonds as an example. So post-issuance, we'll have to look at like the impact metrics. So basically, for the green projects, what would be the associated environmental benefits? And then with that information, it could serve as a feedback loop for the company to see if they want to raise green financing for the same projects, or should they opt for like higher impact projects. And another post-issuance information we need is like, let's take sustainability-linked loan as an example. So, for the loan structure, we set targets for the company to meet. And then actually, in terms of tracking whether the company are meeting the targets, they need to report on the KPIs. And then for those reporting, those are like hard data, and then those data have to be externally verified. So these are all the information we'll need to look at. And how do we make sense of the information? And how do we use the information to assess the company readiness? First is like, we have to know the sector. We have to understand the key ESG challenges of the sector. And based on that, we need to look at like how the company has been doing recently. Are they doing well? So that goes back to like the stock information I mentioned, as well as the historical data and the recent trend. And then we need to look at the company's commitments. Is their commitment strong enough compared to their historical performance, compared to their peers, and compared to international standards? So these are the these are the target information that I mentioned. And then we also like, it's not like, as long as they said they want to do something, it will be good enough. We want to see what kind of business plan they put in place to achieve those commitments. So how real is the business plans? How reasonable? And then also we need to look at like what kind of resources they commit to achieve the business plan. So for example, like what's the CapEx allocation to achieve that business plan? And then do they make it publicly, a public commitment, so publicly announce a proportion of CapEx will be going into clean energy projects, for example.
Great. No, I think from your description, it's clearly very complex definitions that are consistent, comparable, and interoperable in order to make sense of the data and to make good business investment decisions is going to be like critical, and it goes back to what Angus was mentioning earlier of having kind of like this green definition and green classification to then be able to identify what type of solution will most suit your needs and purpose in order to meet, I guess, the financiers' requirements to have a credible science-based transition plan to net zero. So as Diginex, Mark, you are one of the winners of the HKMA's Green FinTech competition. I think that was specifically on the sustainability issue disclosure reporting side, so congratulations on that front. But you also offer multiple other products. Specifically, can you tell us more about the ESG reporting tool and what type of, I guess, challenge or solution you provide to some of these financiers, and how and what type of integration, I guess, or considerations that people should consider when they're looking at picking a solution provider?
Hello, everyone. My name is Mark Blick. I'm CEO at Diginex. We're a Hong Kong headquartered and founded company based out of Cyberport. Our ESG reporting software is now in 45 countries around the world over the past 3 or 4 years. So we're pretty happy with how it's scaled. Yeah. Thank you. We have a very explicit focus on companies who are new to ESG reporting, which is most companies in the market. And we wanted to be able to address companies that did not have large budgets, that did not have expertise in-house to be able to complete their ESG reporting, and frankly, may or may not have wanted to do it in the first place. And one of the questions I always ask when we meet with clients is, what is the reason which you're engaging in this initiative? Is it because you as a company want to do it? Or is it because you have some external pressure, be that from a customer, an investor, a regulator, a stock exchange, a bank, that's asking you to do this? And 9 times out of 10, it's the second category, is that someone outside the company is asking or mandating that they do this. And we'll see this accelerating with the European regulation coming out around CRSD and CSDDD, which passed last month. Our focus was really on how do we leverage tools to automate many of the steps that would have taken many months or longer for them to complete had they gone through traditional consultancy paths. We started off focusing on the corporates, on the issuers, and as we became, I think, proficient at demonstrating we could help small to mid-cap enterprises, or even large enterprises that were very new to ESG reporting, we started being approached by financial institutions and ratings agencies that wanted to have a solution that they could roll out across their thousands and tens of thousands of customers for exactly that purpose. How did they identify risk in portfolios and exposure to specific areas, and how did they identify opportunities where they can upsell financial products on green finance and sustainability-linked loans? For us, our main client base on the one side, the biggest inhibitor is emotional. They don't want to do this because they're worried they're going to look bad or they're going to look stupid. And so they're worried about engaging in a process where if I do this and I'm new to it and I don't have an in-person team and I don't have a budget to spend on lots of consultants and I put the wrong data up there or it's misleading data because I don't know what I'm doing, that's going to prevent me from wanting to do it. Or if I put something out on the internet and I get scored low, why would I go through an exercise where at the end of the day I'll get rated an F or a D-? So for us, and the technology is helping them and get that confidence that often, many times, what companies are doing already would classify under green fintech. So one of my favorite examples was a customer, and this often happens when they get very flustered, and I don't know what I'm doing, I don't know how to do this, I don't know where to start, I have all these people asking me to do this. And in the very next breath, talked about transitioning their fleet of vehicles from traditional gas engines to hybrid engines, switching from traditional cement to green cement, and really focusing on water conservation. So many companies are engaged in these activities. And then for them, when they're engaging for the financial institutions, the discount they may get on the basis points, they're concerned that the cost of compliance will be greater than the discount they're going to get on the basis points on sustainability-linked loans. So it's through leveraging software, hopefully, that they can decrease their cost of compliance, which is a really big concern, not only the cost, but also being able to find the right people who can help them on this journey and set the targets and identify what they're able to do. And on the banking side, and this is a conversation we have a lot with financial institutions, and I'd love to hear your experience, is they engage with companies, and the sales cycle is too long because they have to engage with the company, set the targets, agree on the targets, then identify the indicators that are important to the company, set targets which both sides think are reasonable, and then be able to measure that. And that often is a 5 or 6 month lead cycle just to understand, okay, you as a company, climate is important, or data privacy is important, or whatever the indicator is. And so for us and our focus with financial institutions is how do I reduce that sales cycle to a month or 2 months? So by the time the company speaks to a financial institution, they already know the topics which are important to them as a company, which are material. They already know roughly what the target should be that would be meaningful. And they can engage in that conversation, then the cost of compliance and the speed to deal closure reduces significantly. And on the banking side, being able to them, I talk a lot about our programs this year being banks' pipeline next year. So the more that we can educate companies through software products, that they're able then to engage with banks and apply for sustainability-linked loans and green finance products, which they want to be able to do, and do so in a smooth way.
Yeah, no, I think you raise a really good point in terms, and actually a solution for SMEs. I mean, given that most of the kind of large corporates already have the access or capabilities or the resources to be able to apply for these loans. It's really the SMEs that, again, when we look at the previous kind of like presentations, they lack, I guess, the historical, I guess, credit loan or history with kind of like the banks, etc. So, you know, that's clearly, you know, a very useful tool for, and to help SMEs to basically not only to comply and meet with actually a lot of the regulations that are coming down. So we have the ISSB that will soon be implemented in 2025, but also for a lot of other continued ESG and requirements that are coming into the pipeline in the near future. And also, I think in terms of being able to help the SMEs to prepare ahead of the conversations with the banks in order to kind of position themselves in the best light to be able to access and unlock this kind of like sustainable finance is crucial. So I guess I'll pass the question to you, Angus, in terms of also from your perspective. So we've heard from, you know, the technology provider solution, from a consultant, what type of, and you see not only from the SME perspective, but also through across different sectors, what are some of the challenges of adopting some of these new green fintech solutions for them?
Yeah, there's lots of challenge. But banks, actually, they are not afraid of innovations. In fact, there's actually a long history of fintech adoption in the past 20 or 30 years, from payment to online banking, mobile banking, and then all the way to AI banking, right? But for every change, or put it this way, adoption of fintech in itself is transformation. And the bank actually need to have very careful consideration. When we interviewed the banks recently, a lot of them told us some of the common challenge that they face in terms of considering whether to adopt certain fintech solution. It can be kind of summarized into 3 major areas. The first one is the vendor stability. Yeah, so you can imagine for every change is a transformation. It's a disruption of the way of how they do their current practice. They do not want to do this change every 2 to 3 years. So the maturity and of the company, the fintech company, and also whether the solution is market ready is very important. So that's number one. The second one is a lot of fintech solution, they are very good, to be honest. So when we listen to a lot of high-level pitching session, we often think that, okay, this is a fantastic idea, good solution. However, they couldn't clearly, sometimes these fintech companies, they they struggle to articulate their solution to the use of the bank. Or put it this way, they didn't communicate in the same language. Yeah, I'll give you an example. So, for example, climate risk assessment. When we run that competition, there was a very good solution come out and say, okay, if you are a bank, you join these, subscribe to this platform. Once you enter the coordinate of a certain property, the platform will then return the climate risk results of that property, which is fantastic. Very precise, a very high-level report as well. I mean, high quality. However, there's another company, they come and say, okay, we also have a similar platform. It's also very, very good interface. But instead of inputting the coordinates, they ask the bank to input the company name of the company. So the results actually are also in very high quality, but when the bank input the company name, it's easier for them to create or link that report to the credit report that they use, because the report actually shows all the properties risk under that company. So instead of asking the bank to do it one by one with all this coordination, they only need to input the company name into the platform. Yeah. So these actually clearly become a favorite in front of the banks, right? So that's why I say, I mean, the fintech company doesn't mean they are not good, but the way of how they present the solution and articulate to the use case of the bank is very important. So that's the number 2. And the number 3 is the regulatory concern, and very often is the data privacy and the data security concern. There were some cases in overseas that banks has been penalized by the regulators because of data leakage, or misuse of certain, or not misuse, mismanagement of certain, fintech function. And then it has been banned to deploy new solution or, penalized with financial penalty, right? This kind of concern actually will become some of the major hurdle that these banks will consider when it comes to adopting certain fintech.
I think one of the interesting points here is that even though you have a fantastic technology solution, if it's garbage in, then it's obviously garbage out as well. So you basically need to ensure that the data and the quality that is actually being input into the system is good to begin with. So I guess, and that brings from an end user perspective again, Ronald, what do you see in terms of this data quality and availability of this, like from your perspective as a financial institution?
Yeah, I actually see a couple of issues on my daily work. So I think one issue is like when we search for company data, it's often quite spread out. So it's not like we can actually press a button and then all the information will come out from a database in a spreadsheet. We have to look at a couple of places, at least a couple of places, I would say. So like the company disclosure, like public database, and then also like stock market disclosure, et cetera, et cetera. So I think it would be great if we can have more digital platform that can help us like to consolidate the information and generate in one go. It would save a lot of time. And basically I've seen like a lot of good digital platform. I think technically it can be done. But I think the next step is just like the users will have to work with the developers to actually better define like what the users really need to suit the user's perspective. So second issue is like basically a lot of these data are from the annual reporting. So it's available once a year. And a lot of time when we look at that, we look at like the most recent data is at least a couple of months old. And we need to ask the company how they're doing. Are they on the right track, improving, or actually not improving? So I think more real-time data, more frequent data would be very helpful. And another issue is like in terms of ESG data, is sometimes like you call a data is meant to present the same thing and then call the same, but then it's like actually reflecting different substance from one company to another. So let me take Scope 3 GHG emissions, for example. So, for Scope 3 GHG emissions, there's like 15 categories according to the GHG protocol. So some companies actually, they would include like use of product sold category, and other companies, they may not. They could just include the supply chain Scope 3 emissions. So in that case, like when a company say they are reporting Scope 3, it could differ a lot from one company to another. So I think what would be helpful is like if there's like a standardized disclosure standard, so for people to basically very easily see what the Scope 3 is about, it will be much helpful rather than having to go through the fine print and dig up like what are the categories actually referring to. So I think in general, like digital solutions can be very helpful to solve these issues. First is like it can help the issuer or help like the companies to collate, compile, and report the data. And second is it can help users like us to actually access the data. So with better data, we as banks, we can better engage our clients and accompany on their sustainability journey by tailor-making, for example, like suitable sustainable financial products and advice.
And I guess where there are challenges, there are opportunities. And from your perspective, Mark, what type of, I guess, opportunities or new solutions, like you've heard, some of the issues around like aggregation, potentially Scope 3 as well, emissions like capturing, given we have ISSB coming into play in 2025. What is Diginex doing in this space?
It's a very broad question. I think what we're trying to do and focus a lot on is helping manage expectations on both sides of the issuer and investor. From the issuers, again, building that confidence to be able to report. And the challenge we find on the financial side is an expectation that ESG data will be similar to financial data, and financial data tends to be backward-looking and objective, and ESG data tends to be forward-looking and subjective, and it tends to be much more storytelling. And I'm sure if anybody has spent their time reading sustainability reports, there's a lot of words in them, and it doesn't tend to be quantitative, it tends to be qualitative, and part of the skill is evaluating the company strategy and whether they have the resources and the management and the skill sets and the financing to be able to achieve the objectives they want to achieve, and then being able to finance them or rate them or allocate risk to them based on that basis. And us trying to close that gap between there. I think the big challenge that we see at the moment is I spend a lot of time internationally because we have a big client base, and the reality is ESG market is very different in different markets. In the US, it is very bifurcated. You have the folks who are true believers, so I like to say that's us, who believe in it, who probably will see ESG, the term, go away and be referred to as something else. You have the opportunists who maybe 2 years ago would have put an ESG label on a fund, and just removed a couple of oil and gas stocks and then called it ESG, or companies that put ESG label on a product. And you have a growing but sizable amount of antagonists who are pushing back against ESG and trying to make it, you look at the state funding level, a federal offense to allocate state funds to asset managers who are using it for ESG purposes. And that's a very real thing. And so the challenges that we see is how to navigate that world, because that's an important part of what we're trying to do. In Europe, there's a tremendous amount of regulation, as you know. A lot of acronyms with no vowels in them. And the challenge that we see, and whilst I think CSRD, CSDDD, ISSB, all of these regulations and requirements that are coming out, and we work a lot in supply chain transparency. So you also have the German Supply Chain Act, the French Duty of Care Act, and so on and so forth. Is even if we believe all of these things are directionally in principle the right things to do, does the talent exist in order to help the tens of thousands of companies which are going to have to report in the next 2 or 3 years? And even if the talent exists to put in those companies for them to be able to meet their reporting requirements, is there enough talent to sit on the regulator side to read all of the reports that companies are now going to be submitting to the regulator? So I think that talent gap is a very real one. And by leveraging technology, we're hoping to fill that. We work with a lot of companies who, they're procurement professionals. We're suddenly asking 1 million procurement professionals around the world at large corporates to also become experts in climate risk and biodiversity risk and labor risk. And that's really a really tall task to ask them to do. So we look a lot at how do we automate the risk assessment task for procurement professionals and governance and risk professionals in corporations to allow them to make those judgments at scale. And that's what we're really focused on.
No, that's great. I think we are just almost up on time. And so just before, we wrap up, I guess just 30 seconds, just a quick takeaway for the audience in terms of, what you see in the horizon for the next, 6 to 12 months.
Yeah, I spoke about the ecosystem, right? Although there are actually lots of big companies in this market, they are quite strong at the moment. But our research actually shows that the fintech company and also companies with 100% green fintech solutions, their growth is very significant. We're talking about 68% CAGR until 2025. So they will become a very significant market players in the fintech space in the next few years to come. I think this is a very positive sign. Yeah.
Yeah, I think I explained like the data we need and the challenges we have, but I've already seen early signs of like the availability of solutions to solve these challenges. So I would expect over the next year there will be more of these types of solutions to come up to the market, and then it will help drive the sustainable finance process to become more efficient, and then faster, and then that would have an effect of like increasing sustainable finance availability to big companies and hopefully to SMEs as well.
For me, going back to the earlier point, I think ESG may have peaked in terms of it being on top of everyone's mind. But on the other side, I think increasingly it's become normalized. Companies are already reporting on these issues. I think ISSB has really helped remove this from the sustainability conversation and move it into the CFO's conversation, and I think that's really important. Many people who have heard me speak before, I talk about the grumpy CFO, who's complaining that here's yet another thing he or she has to do, and why do I have to do this new ESG reporting? So my hope is it becomes less about ESG and becomes more about, you have corporate financial indicators, financial risk indicators, and corporate non-financial risk indicators. And things like climate risk or water risk or conservation risk or gender fall within the reporting requirements of a CFO in a company and becomes less of an emotive initiative, which I think it is in some regions, and more of a, I hate to use the word, boring operational thing that companies simply have to do on a yearly basis.
Great. So thank you so much to our panelist speakers. Please give them a round of applause. And thank you to Cyberport again once more for organizing this conference. Thank you.
Thank you.
Jenny as well for doing the moderating session. Can we have the few of you to please pose for a photo perhaps? All right, standing closer together. That's right, looking straight ahead with the official photographer. Ladies and gentlemen, can we put our hands together for the wonderful panel discussion? Lots of food for thought and insights from our panelists. And thank you very much, Jenny, for moderating the session for us. Looking bright and beautiful. Thank you. Thank you so much. Please do be seated, ladies and gentlemen.